You're crazy for buying these stocks right now. You just got lucky in 2020. Anybody can get lucky one year. You're investing in junk. Kathy Wood, she's a fraud. I don't know why anybody listens to her. Right there, I just gave you a mild version of what comment sections have looked like for all stock market YouTubers over the past month and a half. People clearly believe that this is the end for most stocks out there that retail investors were big into in 2020 and early 2021. But the people making those comments in the comment section just don't understand what me and so many other stock market YouTubers are doing right now. I'll speak for myself, but I'll also speak on behalf of Jeremy from Financial Education because I'm sure he would agree with what I'm about to say. We do not care about when something is going to happen. We just care about what is going to happen. So I'm going to sit here in this chair right now and tell you that there will be an I told you so moment from stock market YouTubers. But all in all, I gotta be honest, it might not be tomorrow, it might not be next week, it might not be next month, and it might not even be next year when this happens. Because when we look at valuations, we can see that multiple times in history, for example, if this Yardeni research report went back even a few more years prior to 1999, you would see that forward valuations on large cap stocks were elevated for several years. Right now, here in 2022, forward valuations on large cap stocks have really only been this high for about a year and a half at this point. And this could be another year and a half of this happening before money cycles back in to these small caps and the mid caps that are getting beat up currently. Another example of forward valuations being elevated for multiple years is the Shiller PE ratio. I post about this sort of stuff all the time in the Discord server for my members, whether it's market psychology or just what is happening in the markets right now. And I posted this message to the Discord members explaining the Shiller PE. And you can see that the S&P 500 has only started the year at a higher valuation 2 times in history. Those 2 times were January 1st of 1999 and January 1st of 2000. Effectively, there was at least 2 years where forward valuations were elevated and were really unrealistic. If I zoom into that graph a little bit more, you'll see what I'm talking about with that big bump. There was at least 2 years where valuations were pushed up high and they were unreasonable. But guess what happened? Eventually, those valuations reset. It's what history has proven is going to happen time and time again. So us investors, us stock market YouTubers that are big into small cap names right now that have gotten beaten up and bashed around, we don't care when this happens because we know it's going to happen. So what is there for us to do? Well, one, I can speak for myself and Jeremy from Financial Education, but we're placing our chips where they need to be to profit off of this movement whenever it should happen. But who cares when it's going to happen? We know that it is going to happen. The large cap valuations are going to fall back down to earth at some point in time. These small cap, high growth names are going to get to more reasonable valuations. Their valuations are going to go up at some point in time. But as investors, people lose sight of the fact that time is on your side. That is the beauty of investing. So at this point in time, I would challenge you. Look at your favorite stock out there. Look at a high growth stock. A lot of them, they're getting into the territory where they're being priced for bankruptcy. Is it the end for these stocks? Are these companies going bankrupt? 99% of the time, your answer is going to be no. But the valuation is telling you differently. So how does this make sense? Why are company fundamentals so separated from the stock price? The same thing happened just on the other end of the spectrum in January and February of 2021, where company fundamentals were much lower than the valuations being put on the companies. Right now, it's the opposite, where the company fundamentals are much better than the valuation is maybe presenting them to be. And somewhere there within lies the bubble of opportunity. Whenever you see opportunity, you should take that opportunity. Again, who cares when it's going to happen if you know it's going to happen? If you place your chips right, you're going to be able to profit tremendously off of whatever opportunity you see. All you have to do is stay patient and keep a steady cash flow so you can keep buying the dip until that movement happens and things correct. And guess what? I believe every single one of you watching this video can demonstrate patience and you have cash flows where you can keep buying the dip. What's the point of stressing out when this is going to happen if we know it's going to happen based on history? There's no point in stressing. And guess what? I have time, I have patience, And I have cash flows where I'm going to keep buying this dip. Whether my viewers think I'm crazy right now or not, it doesn't matter to me. This is my money. This is my investment decisions. And guess what? Hopefully, according to history, I will be able to profit tremendously at some point in time, regardless of whether my viewership base sticks with me. You know, that's been something funny that's happened. All stock market YouTubers' viewership is down like crazy. It's brutal out there. Most YouTubers aren't even getting a third of the views they used to get when stocks were at all-time highs. But guess what? This is the time you want to be investing, when nobody is interested in investing in stocks. That's when you want to be investing. And if we take a look at the world's richest people, we're going to see a very common trait. Most of them, 99% of them, are highly concentrated into one or two assets, and they are not widely diversified. And that seems counterintuitive because growing up, all you've heard about investing is stay diversified and stay patient. But the most successful, the people that have made the most money, are not diversified. In fact, how they made their money was they saw opportunity when nobody else saw opportunity. Guess what's happening in the stock market right now? Stock market YouTubers and a very small percentage of their overall viewership sees opportunity that nobody else is seeing. And this is how you profit as an investor. The world's richest people saw opportunity that other people didn't. They did proper research and due diligence on whatever the opportunity there was so that they weren't shaken out if the rest of the world didn't agree with their opportunity they saw, because even if somebody else told them differently, they did enough research and due diligence on that opportunity to be able to trust themselves, trust their own research, trust their own due diligence on whatever opportunity it was. But most importantly of all, they had patience. Patience is the number one trait you need to have in the stock market if you want to be uber successful. Because the bottom line is most people get impatient. The number one way to stay patient is actually to not have too much money invested. Because if you're not in need of that cash that you have invested, there's no point in you checking stock prices daily. There's no point in you worrying about that money if you're confident enough in your research and due diligence on your investments. But the world's richest people, guess what? They didn't harvest the fruits of their investment for years. It wasn't the next day, it wasn't the next week, it wasn't the next month, it wasn't the next year. They started harvesting their fruits several years down the line. And those are some common traits that make very, very successful people in the business world. Patience and the ability to see opportunity when other people don't see that same opportunity. Who cares when these valuations are going to reset when we know it's going to happen? You know, I'm 20 years old. Time is on my side. I have patience. I have my chips where they need to be to profit tremendously off of this movement whenever it should happen, so I'm not worried. But anyways, this was a shorter video. I just wanted to go through this because I think it's much needed in this world of stock market investing, especially in the environment we're experiencing currently. If you're out there buying the dip, buying your favorite companies, and you see opportunity, more power to you. If you guys are new here or returning and not yet subscribed, I would greatly appreciate you hitting that subscribe button down below. And if you enjoy these types of videos, let me know by leaving a like down below, and I'll make more videos like this in the future. But with that, I hope you have a great rest of your day. I'll be back with a brand new video later this week. Peace out.